Hi there, welcome to kneppyinvests and welcome to another technical update video where I go through lots and lots of charts, indices, commodities, bonds, Bitcoin, currency, and some individual companies' charts. Now, typically when it comes to individual companies' charts, I go through a lot of charts, all my watch lists on Friday evening, Saturday, and then I choose some interesting charts for this video. However, yesterday, after I recorded the answer reply video, I decided to go to East Burpengary, which is about a 40-minute drive from where I live right now. And the reason I went there is to have a look at 27 homes in this display village to get some inspiration. Yeah, to get some inspiration, because in a week's time, or just over a week, I am going to have to choose all the colors, all the different flooring, that sort of thing, paints, all that sort of thing, and electrical as well. Where to put all the power points, what type of fans, all that jazz over a 2-day period. I think it takes about a day and a half to choose all that. And I thought probably the best thing to do is have a look at all these homes, get some inspiration, that sort of thing. Now, I wasn't really looking forward to it, even though I knew I really had to do it. I thought it would be helpful. And I'm an extreme introvert, and that sort of experience is amazingly, extremely draining to my energy. And I came back from that little experience just too disinterested in doing anything else apart from watching some TV and also listening to some music. So I didn't go through all the charts that I usually do by this point, but I did see enough charts to choose about 13 companies. So about 13 or 14 companies I've chosen. Anyway, so I'm not really, I'll be honest with you, I'm not really looking forward to that day and a half experience next Tuesday, Wednesday. So that would be like the 6th or the 4th and 5th of May. Oh, I'm not looking forward to that at all. Spending a whole day. One of them is spending a whole day choosing all this stuff. Oh, I hope they have give me some nice things to, to do. Maybe not to do, but, give me a little break at some point in the day for lunch. I like one little break at lunch. That'd be great. Anyway, let's have a look at some charts, starting off with the XGO. In fact, I'm right there right now, so I don't have to go to any new chart here. XGO, really nice bounce, 2-week bounce. In fact, 8,000 seems to be an important level for the XGO. That was the top we saw back after the last bounce we did see. So this bounce has been quite extreme, and we're still in a downtrend. But I'm not sure what we're going to see on Monday's session. Now, futures are relatively flat so far, but that's does not include Wall Street's Friday session. And an interesting day on Friday in America, because NASDAQ had a really good day, but Dow Jones was relatively flat. And we tend to follow the Dow Jones more than the NASDAQ. And you can see that with the Canadian Stock Exchange, the TSX, it was actually down a little bit. So I think there is a chance that we're going to be relatively flat. Now, that also depends on the American futures. Now, if the American futures, particularly the Dow Jones futures, goes on a massive run, and they will start trading. They will start trading tonight, if I remember correctly. Tonight, yeah. Actually, no. Oh, I can't remember when they start trading on the weekend. They stopped trading. They finished trading on Friday evening. And they will start trading Sunday night their time. So maybe tomorrow morning, just before we start trading, we'll start to see their futures coming out. I could be a little bit wrong there. I am delving deep into my memory, so I could be a little bit wrong there. So the way we trade tomorrow might be influenced by the American futures, but if nothing untoward happens there, I would probably expect a relatively flat day on our market, and maybe 8,000 will be a bit of a resistance level for our market. It's also a fairly round number as well, and round numbers are psychological barriers for investors. Yeah, for investors, round numbers are psychological barriers going either way, up or down. Anyway, so for instance, 10 cents, $1, $10, $100, $1,000, $10,000 are really powerful resistance and support levels for individual companies, particularly 10 cents and $1. Okay, so that's the XJO. We've had a nice bounce. I wouldn't say it's oversold, nowhere near being oversold just yet, we bounced off being significantly, no, I wouldn't say it's overbought. We bounced off being significantly oversold. That's why we were due for a big bounce. And the other reason why I just have no idea what's going to happen is because the amount of uncertainty in the world right now is pretty high. We just don't know what Trump's going to do. He could go bananas again and do silly stuff. And the other thing is, I've started to hear a lot of talk about the shipping containers, or not shipping containers, the ships coming out of China. They're not full at all. In fact, they're half full. In fact, they're less than half full. And we are going to see inflation in America come roaring back. Because if you have less supply of goods and the demand doesn't change, what's going to happen to prices? They're going to go up. And because of tariffs on Chinese goods coming to America, a lot of those importers who have to pay that tariff don't want to pay that tariff. So we are seeing some supply chain issues happening now between China and the United States, and that will affect inflation. We saw that a few years ago. So interesting times are in, and we just don't know what's going to happen. I'll say that. We just don't know what's going to happen. XSO, I think I said last week, maybe I should be looking at the XSO. It's not my favorite index. I do like small caps, but I don't like the small cap index, and there's a few reasons behind that. But anyway, the small cap index, nothing much going on here. Just like the XJO, we've had a really nice bounce, but still it's in a downtrend and it's still well off those previous highs. So this is about, what is it about? Still about almost 100 points off the last highs we did see. So still in a downtrend at this point in time, but maybe we'll have a good day on Monday. We'll go to the XTL, which looks fairly similar to the XJO, right on a support level or resistance level, not support, resistance level at 4,480, which was the last highs. So you can see those highs at these levels. So that's an important level for the XTLs as well. So this is the ASX 20. And what else? XTX, I think this will be looking a little bit weaker. Yeah. So this is more in line with the NASDAQ. So we've just had a bounce. All we can see right now is we've had a bounce. Whether this bounce continues and whether we see continued rally, maybe the bottom has been reached. I've heard chatter about that. People try to say the bottom has been reached, that sort of thing. I wouldn't go that far because of the possibility of a recession in the United States. And if we do see a recession in the United States plus inflation, so stagflation, that would be the worst case scenario. In fact, no one wants a stagflation at all. Stagflation, I would say, is the worst type of thing to experience. Stagflation is bad. True, false. Actually, I should do this with ChatGPT. Let's do that. Do I have ChatGPT somewhere here? Yeah, let's go to ChatGPT. Stagflation. So stagflation is high inflation but no growth, or very little growth, or negative growth. Stagflation, good or bad? Let's see what ChatGPT says. Bad for the economy. Well, yeah. Combination of high inflation, stagnant economic growth, and high unemployment. So that's probably the one thing I'm not sure we're going to get is the high unemployment. The main reason behind that is moving forward, the problem isn't going to be, will there be enough jobs for all the people? The question will be, will there be enough people for all the jobs? And that could save us when it comes to high unemployment. So high inflation, stagnant growth, high unemployment. I'm pretty sure this was a major issue during the 1970s. And no one wants stagflation because what policy will the government and central banks implement to save us from stagflation? In fact, does it say it right here? Stagflation is seen as a tough situation to navigate, especially for policymakers. Yeah. So central banks can address either inflation or unemployment, but stagflation presents a dilemma because the usual solutions to one problem, like raising interest rates to curb inflation, can worsen the other problem. So yeah, stagflation is never good. And if we do see a bout of high inflation, yet we see the economy go into recession and we might see unemployment rise a little bit, then that is a worst case scenario. Stagflation. Anyway, so let's go have a look at the banks. The banking sector looking pretty good. So the ASX 200 banks, which is not 200 banks, it's the banks within the ASX 200. This is something I learned quite a while ago. For some reason, I thought the ASX 200 banks had 200 banks in it. There's not 200 banks on the ASX. It has 7 banks. So we can think of those 7 banks as the 4 big banks, Macquarie Bank, Bendigo Bank, and Bank of Queensland. Maybe it's 8. How many banks in the ASX 200 banks? Let's ask ChatGPT that as well. Let's see if it answers it correctly. How many banks, I've got to be able to write, how many banks in the ASX 200? XBK, I think it is. Let's see if it gives the right answer. Comprise 7 companies. There you go. But it did not give us those 4. I was hoping this question would give us those 7 companies. What are those 7? Let's see. I was thinking maybe Judo Capital could be in it, but yeah, it's not. Because Judo Capital is becoming big, but I'm not sure how big. Anyway, those are the 7 banks within the ASX 200 banks. And again, it is not 200 banks in the ASX. Anyway, so in fact, the banking sector, or this particular index, looks not bad. That purple box is sort of, you can see it as a resistance and a support zone going back to about August of 2024. So it's not that long, and it's just gone above it. So nice rally in the banks. And I don't understand why. Now on to some American indices. I could have a look at the New Zealand. Yeah, let's have a look at the New Zealand. Let's have a look at the New Zealand, the NZX50 index. So this would be, I suppose, the 50 biggest companies on the New Zealand Stock Exchange. And I would assume the majority of these are listed on the ASX as well. Let's do it again. Let's ask NZX50, how many on the ASX? I do use ChatGPT a lot, and I'm starting to use ChatGPT more than Google, making that transition right now. And so let's have a look. So there is quite a few, and you can see, yeah, Air New Zealand, Auckland International, Spark New Zealand, Chorus, Contact Energy. So I know all these, not intimately. Mainfreight's probably one of the main freight. I have heard of that one, but I have never looked at it. Or Freightways Group, Vulcan Steel, yeah, Vista Group, yeah. So quite a few companies there. Oh yeah, and then Xero used to be listed on the New Zealand Stock Exchange. I must have been disappointed with that. Sort of like how we're disappointed that Atlassian didn't list on the ASX. So, I mean, it works both ways. Okay, that's the last ChatGPT I'm going to do today. I swear to you, that will be the last one. So let's go back to the New Zealand Stock Exchange, the NZX50 index. This is in well-defined downtrend. In fact, what do you call it? The 25-day exponential moving average is acting as resistance quite nicely. Quite nicely. You can see this particular index is hitting that 25-day moving average quite often and just pulls back every single time it gets close. And I think we might see this with the Dow Jones, if I'm right as well. Okay, let's have a look at some United States indices, starting with the NASDAQ. And the NASDAQ, that 25-day moving average was acting as resistance. And we have seen the NASDAQ move just above that the last 2 trading days. So a little bit more strength in the tech companies in America over the last few days. So that's good because I am heavily invested in tech companies there. So a nice little rally, but I don't think at this point in time, I'm not confident that the low is in. There's just still too much uncertainty for me to be getting to that point, to getting that point. And very unlike COVID-19, when we started to see that rally, when all the countries of the world announced stimulus, I was really confident we had seen the bottom at that point in time. And I was jumping in, even though I didn't want to jump in that quickly. I was jumping in at that point. I am not jumping in now. A little bit too much uncertainty for me to be confident that the low has been set. Dow Jones also, this one is the 25-day moving average has been acting as resistance. So you can see a lot of volatility. You can just see that in the candlesticks. So much volatility the last, we'll say 3 weeks or so. And with this sort of volatility, which you typically do see in a bear market, you just don't know which way the market's going to go. Have a look at previous bear markets. So much volatility in those markets. And my favorite my favorite thing I've ever heard, I'm going a little bit dramatic here, is when people have said, you have to stay fully invested because if you don't, you miss the really good days in a bull bear market. I don't think they say that. I don't think they include that little bit, but you will miss the really good days, and the really good days happen in bear markets. But what they don't say is if you miss those really good days, you also miss the really bad days as well. And in the bear market, everything goes down. Well, maybe not everything, but the whole market as an indice as a whole goes down. So overall, you're better off not being fully invested in those periods. I've heard this time and time again as an argument why you need to be fully invested, because otherwise you miss those really good days. And if you eliminate those really good days, then your overall returns are going to be fairly low. It's a ridiculous argument they put forward. I haven't heard that recently, but it does pop up on occasion. Anyway, so the Dow Jones, a lot of volatility, and you tend to see a lot of volatility in bear markets. So this is normal, and we just don't know which way the market's going to go from here. No idea. Russell 2000, which is the small cap proxy, will say. Well, it actually says US small cap 2000 index. Anyway, this one is also in a downtrend. And also maybe even the 25-day moving average is acting as resistance here. In fact, the Russell 2000 was flat, finished flat. You don't usually see that. Finished flat. In fact, the last 2 days, apparently it's finished flat the last 2 days exactly after being up 2%, exactly, 0% the next day, and then 0% the next day. That has to be wrong. Yeah, that's wrong because it says Monday, the 28th of April. That's wrong. Why do we have, the rest don't have it, but for some reason the Russell 2000 has Monday already on here. And it's, in fact, still Saturday there. Don't know. But anyway, the Russell 2000 was flat on Friday session. Yeah, 0.00%. Okay. Let's move on to some international indices, starting with the Nikkei. And we have seen some really big bounces when it comes to international indices, particularly the German and maybe even the FTSE. Hang Seng still looks okay, but Nikkei, nice bounce here. But again, this is probably just a bounce because it was oversold. So not as keen on the Nikkei. Hang Seng looks pretty good, nice bounce. So let's see. I'd love to see Hang Seng get above the old highs. So about 24,800. And to the DAX, this one, what a bounce. This one is, in fact, the DAX is getting quite close to the all-time high. So a lot of strength in the German indices, which is really fascinating. Again, the largest component on the DAX is that SAP company. Here I go. Sorry. Largest company on DAX is it? I'm pretty sure it's SAP. Yeah, SAP by market cap. Oh, this is good. Where it is, yeah, $508 billion. And then we have Siemens and Deutsche Telekom Alliance, Airbus. This is actually a pretty good site. I've never seen this site before. Company's market cap. Anyway, so SAP has done fabulously well. And I'm pretty sure one of the reasons why the DAX is doing fabulously well is because of this software company called SAP. Look at the chart. What a chart. What a chart for the DAX. So it looks like, yeah, by far it is the biggest company on, sort of like CBA, saved us one of the days in the past week because it's up 4%. Don't know why. The same thing with the SAP and the DAX. Now onto the FTSE. We'll go back to the daily chart. And the FTSE has had a really nice bounce as well. But you probably could argue it's at a resistance level, which is the old top of the trading range. So let's see what happens over the next few days. It does look like maybe it wants to start to turn over. The last few days, not up all that much, 0.05% and 0.09%. So maybe signs of it trying to turn around. So the top has been reached, maybe. And as I mentioned, I think I mentioned before, Canadian market was actually down on Friday. And if I had to compare the ratio to any sort of index in the world, it will probably be the TSX. So the Dow Jones and TSX, and because the TSX is actually down a little bit, I would not be surprised to see us down on open tomorrow. In fact, our futures up slightly, but our futures finished on Thursday evening, I believe. Let me have a look. We can actually look at the 1 minute chart, and I can tell exactly when the future stopped. Oh no, apparently, according to this, our future stopped at 6:59 on Saturday morning. I didn't know that. So they traded all through Saturday, or through Friday, did they? Yeah, they did. There you go. I did not know that. I thought they would have stopped trading. There you go. Good day to learn. Okay, let's go to the... That's it for the international indices. Now let's have a look at commodities. Starting with gold. So we did see gold pull back a fair bit. In fact, quite a few gold companies fell by about 10% on, was it Wednesday or so? Maybe Tuesday or Wednesday. And that's because gold prices pulled back a little bit. But when you have a look at the daily chart for gold, there's nothing wrong at all. And in fact, I would have said that gold was primed for a little bit of pullback. Share price, or the price was getting well above the moving average. So whenever that happens, it's primed for a little bit of a pullback. We've seen that pullback. Hasn't been a strong pullback at all. And I would not be hesitant about buying maybe one more gold company at these levels. Maybe it's Kaiser Reef. So we did have a few questions about, well, 2 questions from the same person in regards to Kaiser Reef. I had a closer look at that company. I was thinking, oh, this, and the market hasn't really reacted at this point in time when it comes to that potential of Kaiser Reef. So I do like when the market hasn't quite reacted. They just completed a capital raising, acquisition, and it could be a company transformational acquisition. I do want to delve a little bit deeper into that trend, the acquisition, but that could be my next gold play. Okay, silver. Silver, silver still in this trading range. Well, sort of. Overall, if you have a look at the weekly chart, it is in an uptrend, sort of. We had that really big down week. Remember, silver was down, 16%. About a month ago, and we've had a nice rally since then, but I don't know, not as bullish when it comes to silver as I am gold, but there should not be such a disconnect between the two commodities. So if gold keeps on going up, silver really has to keep on going up as well. But if I do see any more of a disconnect, silver companies could be a play moving forward. So we're talking about Adriatic, SVL, which is Silver Mines. What's the other one? ASL, Indian Silver. There's probably a few more out there as well. But Adriatic, I'm pretty sure, could be one of the only gold producers on the ASX. That's in Croatia or Bosnia. So here we go. Whatever it's called. Bosnia and Herzegovina. Okay, so silver, meh. So gold, I'm like, yeah. Silver, like, meh. But don't forget, there is a relationship between the two. And what about copper? By the way, I haven't gone through most of these charts yet. I probably should go through these charts first and then record the video. Copper, look at that bounce. Again, a lot of volatility when it comes to copper, which way this is going to go. If we do see weaknesses in the economy, further evidence, South Korea, their GDP was negative for the quarter. It was a bit of a surprise. So is that the first hints of cracks in the economies around the world? South Korea, GDP going negative. So if we do see, because Dr. Copper, this is a nice little, copper is a nice proxy for the health of the economy. So if we do see weakness in the economy, maybe copper will pull back a fair bit. And I think that's one of the reasons why copper prices did fall a lot. And again, it's rebounded, but I'm not confident on this rebound. What about iron ore? Iron ore is just a big meh for me, a really big meh. I'm not interested in BHP, Rio Tinto, Fortescue just because of this chart. I might be interested in a company called Phoenix, smaller company, less appreciated by the market, but the iron ore chart just looks a big meh. not much of a trend, if any at all. It's ugly. Not ugly. It's just a mark. But you know what is ugly? Well, not as ugly is uranium. We have had a 4-day bounce. In fact, I think uranium might have had a really good week. Uranium up 6.77%, but that is not the bottom. We have seen in this downtrend, uranium has had pretty good weeks. 30th of December, so towards the end of December, uranium was up 9.3%. In the middle of November, uranium was up 9.83% in 1 week. There was a nice little rally in uranium back in September. That fizzled out. But overall, uranium is in a downtrend. This is the weekly chart. Even in the weekly chart, it's in a downtrend after being an uptrend for a long time. And in the daily chart, uranium's been in a downtrend for, I would say, probably since about June of last year. In fact, I put this little sort of dash line, which is a nice downtrend line. You can see it hitting, uranium has hit this particular downtrend line 1, 2, 3, 4 times recently. The last time was in January, and then uranium prices just dropped. So, yeah, no shock there is a bit of a rally with uranium, but it's in a downtrend. So I don't care about long-term potential of uranium. At this point in time, it's in a downtrend. So I have no interest in uranium companies just yet. Palladium did put out a nice little report, and they had a nice little rally. But a lot of uranium companies had a rally because uranium went on a rally. Oil. So I did actually pick up a trade in Karoon, and that was one of the reasons I decided to buy a trading position in Karoon is because of valuation, and potentially we might see a bit of a bounce in oil. But again, if we see weakness in the economy, oil prices will be under pressure because there is a slowdown in the demand of oil during recessions. That's an absolute truth. In fact, if you go back to, well, we know what happened in COVID-19. Oil at one point went negative. But if you go back to the if you go back to the GFC, look what happened to oil during that period. Oil went from $145 all the way down to $30. Yes, so that is a problem with oil. The other thing is, if you have a look at oil, it's just going sideways at this point in time. But if we don't see a slowdown in the economies around the world, oil's probably undervalued right now. It's fairly cheap. But we're not seeing it at the pump power, the power. We're not seeing it at the fuel pumps, are we? Still $1.75 around here. What else? I suppose I'll go through the other commodities fairly quickly. So gas. Oh, gas is pulled. Oh, gas. Everyone keeps telling me Woodside is more of a gas play than an oil play. And gas right now is at a support level, nice little support level. So maybe we're due for, well, not we, maybe gas is due for a bounce right now. Lithium, look, I'll always continue following lithium prices. Notice you can't really see lithium candlesticks here. So all we've got really is the moving averages. But notice how the 100-day and 25-day moving average are starting to converge. So this could play out for over the next few years. We won't see a rally in lithium, but maybe lithium is finding a base. Maybe lithium has found a floor. But I still have no interest in lithium at this point in time. It could change. But at this point in time, I'm not interested. And one of the reasons behind that is I have been too early to the parties in the past, or to trends. And this happened to lithium twice. I was confident that lithium would take off, and I did buy some lithium companies, and I was just waiting. And I got, I wouldn't say bored, but I became less confident in that sort of thematic, and then I decided to sell a few of those plays, and then lithium took off. Same thing happened with coal many years ago, many years ago, and I think also even iron ore at one point, I was confident it was going to change. Iron ore prices would go up, and it took a little bit more time. Anyway, so I am trying to be a little more patient with these sort of plays. When I think we're going to see a turnaround, and I think that's going to happen with lithium, I just want to see the signs first. Coal. So if you go have a look at the weekly chart, so when I was talking about the turnaround in coal, there was I can't remember when it was. It could have been the one from 2016 to 17, and it was also the one from 2020 and 2021. I bought a few coal companies in later or the middle of 2020, later 2021 or later 2020. I was expecting to see coal prices start to rally, and it took a little bit more time to play out than I expected. I'm not sure if it was then, or I can't remember exactly when, but and then after I bought and then sold, actually no, it was before. It was before COVID-19. Yeah, I can't remember when, but I remember being way too early to this massive rise in coal prices. And I actually did have a couple of coal companies in my portfolio for a while, waiting for the bounce, not for the bounce, for the rally. And then it happened. And anyway, tin. Remember there was that massive rally in tin, that one-day rally, because there was a tin mine in DRC, Democratic Republic of Congo. That let's. I'm sorry, I've got to do this again with ChatGPT. I haven't had any news about that. Tin mine DRC halted production. What's happening? And good thing about ChatGPT, it understands my mistakes. There it is. There we go. As of late April 2025, the mine has resumed mining activities. There we go. Yep, there we go. So I might read this later. So that's probably why tin prices went bananas and then have dropped back down. And this really affected Metalworks. I think that was the tin play at that point in time. I don't usually, you can see, although it did bounce off the nice little support level, I don't really play these sort of news announcements or these sort of announcements when some mine has closed temporarily a mine because of political tensions or something, because you just don't know how long it's going to play out. It could play out for years, but it could play out for like 2 or 3 days. And that's what happened with tin. Palladium, I've just skipped by nickel. Palladium, no interest in Palladium at this point, no trend at all. Cocoa, cocoa's rising again. That's not good. I do like Lindt chocolate, particularly the salted caramel Lindt. That is very narrow bars. And I had a look at the price of that Lindt bar, whatever it's called, piece of chocolate. $8.50. Used to be like $4. I've no interest. I'll only buy it if it's half price. Even then, I will struggle. My wages haven't got up double over the last few years. But you can understand cocoa anyway. Okay, now on to Bitcoin and Ethereum. Now, I haven't looked at these charts for a while either. And Bitcoin, it's trying to rally to 100,000. Go Bitcoin. Really good day, looks like. You can see I don't look at these charts all that often. On the 22nd of April, Bitcoin went up 6.83%. So it looks like maybe the trend, looks like we're going to get another moving average crossover. So looking much better. Bitcoin, looking pretty good. The other really good thing about this chart is we had that really good rally. In fact, it was a 2-day rally, up 2.7% and then 6.83%. Now, if that rally was weak, what you would have seen is you would have seen the price of Bitcoin drop. So more supply of Bitcoin on the market than demand. So that means the price would have dropped. But what we've seen then is a very, very gradual uptrend. So very narrow, sort of like a flag or a pennant. Although I think the flag goes down a little bit. Let's Google this one. Flags, pennants, technical. I want to see if, yeah, that's a pennant. I want to see if there's any sort of, I'm not really seeing it. I'm trying to see if there's any sort of technical pattern or technical signal where you see this sort of thing happening. So massive rise, and then all you see is a very narrow lack of volatility, 5 days, just nothing much happening, just a gradual rise. For me, that would be fairly bullish. That'd be really bullish. The other thing I'd probably like to see in that sort of situation is not a lot of volume. So massive volume coming in, and then this little period, not a lot of volume. And then I think more than likely we're going to see is another leg up for Bitcoin. Maybe. We'll wait to see. Ethereum was much weaker than Bitcoin, and even this little rally has been much weaker. So that there was one day it was up 11.21%, but looking a little bit stronger. But a little bit stronger for Ethereum, but I think this is definitely much weaker than Bitcoin. Okay, now onto bonds, and this one might be interesting. Bonds all over the place. Don't know which way to go. Looks like over the week it was down a little bit. Down at 1.79%. And I just have no idea which way this is going to go. I would assume it should go down further, but if there's more countries selling American bonds, then the price would go down, or bonds go down, and the yield should go up. That's the definition. So, that's what happened. Isn't that what happened a few weeks ago? The whole reason Trump sort of backtracked is because bond yields just suddenly rose. You can see that massive rise in bond yields. And I think the reason behind that was countries were selling their bonds, and that meant the prices were going down, yields going up. I think that's how it works. I'm pretty sure that's how it works. Anyway, let's have a look at the currency. Australian dollar up to 64 cents. Go, Aussie dollar. We need more strength in the Aussie dollar. Look at that volume coming through, by the way. Nice volume coming through. So go Aussie dollar. Get to 65 cents, and then it's an uptrend. We want to see Australian dollar get to 5,000 US dollars, so I can spend like $1,000 on my whole trip. That would be amazing. That would be brilliant. I'm pretty sure that's what Trump wants. He wants to devalue their dollar, so his exports or American exports become cheaper. That would be great for us as tourists, but not probably great for the Australian economy. Maybe not the Australian economy, but Australian exports. Australian exports. Imports will be really cheap, but exports will be expensive. Okay, that's all I have for that part of the video. Now on to some individual companies' charts. These are interesting for various reasons, and I think for some of these we need to look at the weekly chart. The first one is AMA. I think we can look at the daily chart for this one. So it looks like we are seeing a basing pattern happening, sort of a broad basing pattern. Share price going sideways, been going sideways for looks like about 18 months, possibly getting into an uptrend. I thought maybe it was getting an uptrend back in late last year. That sort of faltered, but this does look interesting just based off this daily chart. If you have a look at the weekly chart, has dropped a long way from its highs, which was pre-COVID. Share price low during COVID was 15 cents. I'm not sure if this company's done significant capital raisings. I'd say it has. We could easily check that out. But even with the weekly chart, you can see a nice long basing period for this company. So not the highest quality company at all. In fact, I'd say this is one of the lowest quality companies, but this is a technical analysis. We're not judging a company by its quality. We're judging a company by its chart. So this is actually a really interesting chart, particularly if the share price gets above 7 cents. And it's close, 6.6. Why 7? That's the highs we saw back in November of last year. KLS, Kelsian. This one is interesting because where the share price is in regards to COVID-19 lows. So this is on my watch list, and this is a possible low. And I would say, and again, it's psychological. So there will be shareholders who know the share price of this company got as low as 250 during COVID-19. And they see the share price at 257 right now, and they go, wow, I can buy this company at the lows it reached during COVID-19. Wow, this must be a buy. So we have seen a little bit of support at these levels, a little bit. So if we continue that, we've seen the share price oscillate above and below that low, COVID-19 low. But if you do have a look at the daily chart, well-defined downtrend. It's in Kelsian owns travel stuff like bus groups, stuff like that. Ferries. I'm pretty sure they own ferries. They either own ferries or they run the ferries. I forget what. Let's have a look. Let's have a look to see what TradingView says. Provision of multimodal transportation and tourism services. marine and tourism, Australian bus, international bus and corporate, focus on vehicle and passenger ferry services, barging, coach tours, package holidays. So obviously one of the reasons why the share price has dropped a lot is because of pressure on the tourism industry. We've seen significant drops in share prices of Flight Centre, Hello Group or Hello World, Corporate Travel Management, Tourism Holdings. And if you have a look at all those charts, I mean, the share price have gone. I think there is a chance that possibly the market is overreacting and peak pessimism has already been priced into the share price. I'm going to say possibly, but there could be more to go for this company. So Kelsian, yeah, at COVID-19 lows. And look at the upside. So a four bagger. Doesn't mean it's going to be a four bagger. Sky Entertainment Group. This is another interesting one. Well, maybe not interesting, but this is a casino. I forget where they have casinos. Is it Adelaide, New Zealand? Adelaide, New Zealand. Is it Canberra? I forget. Auckland, Adelaide, Hamilton, Queenstown, Adelaide. So maybe it's just New Zealand and Adelaide. Okay, so a lot of negative sentiment in the casino business, particularly with Star Entertainment Group, and SkyCity has seen that negative sentiment play on their share price. The COVID-19 lows was about $1.20, not exactly, and share price of this one just keeps on dropping, and it's at $1. In fact, it's just bounced off $1 a little bit, not a lot, but a little bit. It bounced off $1 on Wednesday session. In fact, the share price low on that day was $1 exactly and closed at $1.02. So up to $1.06. So again, round numbers are really important. So $1 is a really important psychological level when it comes to share prices. I've seen share prices of companies bounce off $1, and not only bounce off $1, bounce 30 to 40% off $1. And then eventually it comes back to $1. You might see a less strong bounce, a weaker bounce off $1, and then eventually it falls through. We saw that with PeopleIn. Let's have a look at PeopleIn really quickly. I do remember this one because I actually played this bounce. This was like the perfect bounce of $1. Where was it? Here it is. Share price got to $1 in late 2023, and the share price went all the way back up to $1.45. But look at the volume when it hit $1. Massive volume. That was the key for me, the massive volume. And I expected a bounce, really confident a bounce. It happened. I did not sell at the high. I sell at, I think it was like 20 or 25%. I think it was within a week or so, I took profit. And then share price tried to bounce off $1 again. The next time we saw it get to $1, but very weak bounce. And then it just fell through $1. And what happens? After share price falls below $1, what happens after that? $1 becomes, instead of support, it becomes resistance. So share price of PeopleIn fell below $1 and then rose back to $1 and then it hit $1 and then fell away. So for those who say technical analysis does not work, absolutely booey. Booey to those because they don't look at evidence. This is great evidence. Great evidence that round numbers, $1 is acting as support and resistance, psychological barrier, if there ever is one. And you can see it again. In fact, it happened again with PeopleIn. Share price rallied back up to $1 back in December. And look, 2 days, in a fairly short period of time, share price got above $1 and then pulled back. Selling came in. And it is struggling to get back up. By the way, if share price of this one gets to 70 cents, not far off now, a nice little possible trade. I think there is likelihood that this share price of this company is now basing, going sideways. So 70 cents might be a nice little trade for PeopleIn. By the way, and just like what the other company was, it AMA Group. No quality in this one, lack of quality. Not my favorite company in the world. Spark New Zealand. We're going to have a look at the weekly chart for this one. I think I've mentioned this company a few times. And I saw that this company's share price was in a beautiful uptrend for well over a decade. Beautiful uptrend. But then I went back further and noticed share price dove a significant amount during not during COVID-19, during the GFC, and even before that, during the tech bubble burst. So it does seem like this is a fairly cyclical company. And New Zealand is in a recession, maybe even a depression, and the share price of this company has been significantly affected. Spark New Zealand, sort of like Telstra, is it? Am I being a little bit naive, saying it's like the Telstra of New Zealand? Provision of telecommunications and digital services. Is Spark New Zealand, I'm going to do it again. Is Spark New Zealand the Telstra equivalent? Equivalent in NZ. Searching the web. Let's have a look. Yes, Spark New Zealand is broadly considered the equivalent of Telstra in Australia. There you go. And then it just, looks, it has a comparison snapshot. Summary. Okay. Anyway, so we have seen the share price of Spark New Zealand just drop off like a rock. It has. And again, this shows you how powerful fear is. Fear is much more powerful than greed. And there's also that saying that shares go up the stairs but down the elevator. In actual fact, you can see it here. Shares slowly grinding higher, and then when bad times come in, you see the share price just drop like a rock. One thing to notice, look at the volume, massive volume coming in the last 6 months or so, but the share price just keeps on dropping. We have seen the share price rally off $1.80, but if we go back in time, the share price was at these levels back in 2013. I do think eventually the share price will turn around, but it might take a while. So if we go back to the last time share price was in a downtrend, so it took a while for the share price to go into an uptrend. So this was back in 2013-14. It took a while. So I think this could play out over many months. In fact, it could play out over many years. So at this point in time, I'm just paying a little bit more closer attention to Spark New Zealand, but not there yet with any sort of buy. James Hardie, this one's a little bit different. I'm going to use the 200-week moving average. I'd say there's an argument that James Hardie is a high-quality company, and share price of James Hardie is now below the 200-week moving average, and is now a time to buy. Not only that, you could probably maybe put an uptrend there. Yeah, maybe. So is James Hardie a high-quality company? And is this prime buying conditions or prime buying prices for James Hardie at 36.38? Well, that was easy. Okay, I am trading another company called Nib Holdings, and this was what do you call it? A trend killer event. So share price in a downtrend. It's been a downtrend for a while. It's not a well-defined downtrend, but it's in a downtrend. Well, I suppose you could call it a well-defined short, medium-term downtrend. They had bad results in August of last year. Share price dropped 17.7%. And then they released results in February, turnaround. Share price in a downtrend, nice one-day candlestick. So this is a trend killer event. Share price, I think, has a chance to go higher from here. And it does look like the share price is moving to a nice uptrend. And I hadn't really thought about Nib Holdings as a potential high-quality company. And then I had a look at the weekly chart, and I did the same thing with James Hardie. I looked at the 200-week moving average and have a look at this, and this is the characteristics. This chart is a characteristics or has a characteristics of a high-quality company. Share price typically is above the 200-week moving average, which is exactly what you want to see. And whenever it goes below that particular moving average is good buying conditions. So it went below for a period in 2020. That was a great time to buy. And it's been below it now for a few months, or for 6 months. That was great buying opportunities. And now it's starting to rally. And it's now just above the 200-week moving average. So Nib Holdings, I've never really thought of this as high quality. Possibly it is, based off the chart. Oh, car sales based, again, going back to the 200-week moving average. I have more thoughts about car group in terms of where it fits in the quality spectrum. So with Nib Holdings, not sure. Car group, yes, leaning towards high quality. And that was before I had a look at the longer term chart. But I would have expected the chart to look like this. A beautiful uptrend over time. And whenever the share price drops below the 200-week moving average, beautiful buying conditions. We've seen it happen, not even below it, or just on it. So we saw it happen in late 2016, during later period of 2018, which makes sense, during COVID-19, during that June-October period of 2022, and just now. In fact, it's just bounced off, perfectly bounced off the 200-week moving average. So I wish I was following this company a little bit more closely. It is a company I wanted to buy, but I've never held this company. Oh, back to the 200-week moving average, Reece. I've always thought of Reece as being really overvalued. Last time I looked at Reece, when the share price was like at $27 or something, the P/E ratio was like 60. I was like, no way, I'm staying well clear of this one. But the share price has dropped a fair bit. Not quite hard, but getting close to being hard, which means the P/E ratio must be around 30. And the P/E ratio, I believe, is 26.62. Now, again, a couple of interesting things here with Reece. Is this a high-quality company? I think maybe you could argue that. And this one goes back a long time. This one goes back to the 1990s. And very rarely has the share price fallen below the 200-week moving average. It did it during the GFC for a period of time in 2011, for a very brief period in the COVID-19, for a very brief period during the 2022 weakness. And look how much it has fallen below the 200-week moving average in recent times. So is this a really good buying opportunity for Reece? Not only that, there's a nice little support level for Reece's share price at about $13. And it almost bounced off $13 perfectly. So maybe the bounce is in, share price up $15.51. So never really thought about Reece in that light, but I saw this chart and went, ooh, this chart does actually look fairly interesting. Euroz Hartleys. I've been telling myself, or asking myself, telling myself, I suppose, I should take a closer look at Euroz Hartleys in terms of not the chart, but what the company is doing. So they're like a broker out of Perth, I believe. The reason behind that is I did hear someone talking about Euroz Hartleys, and it was a bull case. And whatever they said, I was attracted to, and I went, I've got to look at this company a little bit more closely, but I forgot. And then I had a look at the chart, saw the share price had pulled back to about 80 cents. And then I had a look at the chart and went, ooh, 80 cents is a nice support level for Euroz Hartleys. And it's been a nice support level since October 2023. We can see how 80 cents has held firm for a long period of time. Now, there is definitely an argument that the longer you see a support level being touched by the share price, even a resistance level, the weaker it becomes. It just gets peppered. I could say it's stronger it becomes, but the weaker it becomes because it keeps getting peppered, and then eventually it's going to fall through. But we have seen it, share price rally off 80 cents a few weeks ago. And so when I had a look at this chart, I went, oh, I should have a closer look at Euroz Hartleys again. I'm going to have a very quick look at their metrics. Dividend yield 5.85%. P/E ratio 13.06. Growth in revenue. Ooh, revenue is going downwards. Not sure what's happening there, but I need to have a closer look at this one. Oh, back to the weekly chart. We have Fleetwood Mac. No, Fleetwood Limited, not Fleetwood Mac. It would be really good if we can trade and buy and sell companies on an exchange. That would be awesome. Then I could buy Fleetwood Mac. Who would I buy right now in that case? I have no idea. Anyway, so why Fleetwood Limited? Because share price of this company has been going sideways for many years. And when I say many years, I'm talking about, I would say probably almost 10 years. I'll also say it's been in a trading range for at least 7-8 years. And the top of the range is about 280. The bottom range is just above $1. And where is the share price of this one company right now? Almost at the top of the range. So we can see how important that top of the range is. A few times share price has got to that top of the range and it's pulled back. Last time we saw that happen was back in 2021, and it's near there now. Near there now. So will it happen again? Will history repeat again for Fleetwood Mac or Fleetwood Limited? Anyway, so we'll wait and see. Okay, Nufarm. So the last 3 of the last 4 are agricultural companies. So I did go through the agricultural watch list, And yeah, 3 companies charts look interesting. Now, Nufarm, I've got this purple box. This purple box is prime buying for Nufarm, and it's been like that for 15 years. Yes, 15 years. If the share price falls into the purple box, more than likely you do okay in the longer term if you just be patient. On occasion, share price goes below the purple box, the bottom of the purple box, but happens rarely. But look how many times share price of Nufarm has gone into this purple box. So the first time was back in 2010. Then it went back in 2011, 2013, 2014. And then we saw a massive run the share price. And then went back into the box during in 2019. Again in COVID-19. Also back in late 2020. And then it just stayed above the purple box for a while. And then it came back into the purple box in August last year. So we're talking about 6 months ago, or just over 6 months ago now. And it's remained in this purple box for the last 8 months. And yeah, it's been above it slightly. It's got very close to the bottom. So is this an opportunity to buy a Nufarm at historical low prices? I'll leave that up to you. Nufarm, by the way, first suburb I lived in Brisbane, Nufarm. That's spelled a little bit differently. And I wish I bought an apartment in Nufarm because I would assume the prices there are really high. Elders. Oh, yeah, this is the weekly one as well. So this is the weekly chart for Elders. I'll go back to this is the weekly chart for Elders. A lot of interest in Elders a few years ago. And then this was back in 2022. And then the share price just plummeted. In fact, it plummeted all the way down to $5.50. Where the share price right now, $6.13. So a little bit higher than that low we saw back in middle of 2023. However, 550 is an important level for Elders going back to 2017. It's a nice little support level for this company, and it is getting close. So keeping a close eye on Elders and see if 550 holds firm. RFF, what's this one called? Rural Funds. Rural Funds, a fairly similar case to Elders, where the share price is very close to a support level. Now, the first time the share price got to this support level was back in August 2019. I'm pretty sure that was around a short report on Rural Funds. Oh, getting back into my memory, I'm pretty sure there was August 2019 Rural Funds, RFF, short report, August 2019. Let's have a look. See if it's true. There we go. August 2019, targeted by US-based short seller Bonitas Research. Published a report alleging that RFF had fabricated over $28 million in rental income, overstated its net assets by 100%, and engaged in undisclosed related party transactions, suggesting the company's equity was worthless. August 9, 2019, 42% share decline in share price. Okay, so that was a brilliant buying opportunity because the share price fell to $1.38 on that day. Anyway, so we can see share price then rallied fairly quickly after. And this is actually a really good case where you don't necessarily react to a short from a company. There's a reason they are short. But on occasion, they are right. And on occasion, they are right for a reason. And we have seen it a few times when there is a short report on a company, and then that company goes bye-bye. There was a company, I forget what it was called, many, many years ago. Anyway, so, but I would say mostly short reports are not that, I would not sell on a short report. I'd be more likely buying on a short report than selling, and this is a good case. Anyway, so Rural Funds went to a high, share price went to a high about 320 back in early 2022. Share price then plummeted all the way back down to about $1.70 back in June 2023. And it's at that level again. So this could be a low for Rural Funds or near a low for Rural Funds. And I would assume they have a nice dividend, 6.68 dividend yield, P ratio 13.8. And finally, Lend Lease. This is an interesting one. I wouldn't not even think about buying Lend Lease. No interest at all. If you have, this is the weekly chart. In fact, in the weekly chart, the share price has been in a downtrend since 2020. Just keeps on going down. But the reason I wanted to show you this is if you have a look at the weekly chart, and you can see I've got a dashed line there. Let's go all the way back to the lows. So instead of COVID-19 lows, I'm using GFC lows for Lend Lease. So the GFC lows for Lend Lease were around about, well, we've got, in fact, let's just zoom in that area. The lows were about $5, just below $5. That was the lows for Lend Lease back in the lows of the GFC. So it would be March 2009. And where is the share price now for Lend Lease? Look where it is. Oh, so close, 522. So we're talking about, what's that, 16-year low and at the GFC lows for Lend Lease. Are you going to be buying this company? It must be cheap now. 16-year lows. Is it cheap for a reason, however? So this is an interesting one for me. I'm not even thinking about buying Lend Lease, however. Anyway, that's it. That's all I have for this particular video. Technical update video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.